Welcome to The Explainer. Have you ever wondered how a simple purchase at a corner store ends up on a huge financial report? Well, today we're going to pull back the curtain on all of that. We're going to show you exactly how every single financial event, no matter how big or small, gets recorded and organized to tell the true story of a business.
Look, at first glance, accounting can feel like you're trying to learn a whole new language, right? It's filled with all this confusing jargon. But what if I told you it's a language anyone can learn? Seriously, by the end of this explainer, you're not just going to understand the basics. You'll be able to actually read the financial story of pretty much any company. So, you ready to get fluent?
All right, let's roll up our sleeves and get started. Just like a builder needs a blueprint, we need one too. In accounting, we've got a specific set of tools and one single golden rule that, I promise, if you can master it, everything else just clicks into place. So our toolkit? It's actually pretty simple. First up, you've got the journal. Think of it like a financial diary. We log every single thing that happens, in the order that it happens. Then we have the ledger. This is kind of like a super organized filing cabinet that takes those diary entries and sorts them by category. And our secret weapon? The T account. It's literally just a T shape that lets us see the two sides of an account, which makes tracking the flow of money incredibly easy. Okay, and now for the main event, the one rule that controls everything. And yeah, it's got a pretty strange name, but I guarantee you will never forget it. Dead click. This one little phrase is the key that unlocks the entire system of double entry bookkeeping. You master this, and you've basically mastered the fundamentals of accounting.
So what's the secret behind this dead click thing? It's actually genius. Dead tells you which accounts go up, with a debit, drawings, expenses, and assets. Click tells you which accounts go up, or the credit, capital, liabilities, and income, or revenue. And here's the magic. Every single transaction has both a debit and a credit, which means the books are always in balance. It's a really beautiful, simple, and powerful system.
Okay, so we have our tools, we have our golden rule. Let's actually put them to the test. We are now the official bookkeeper for a brand new startup. Let's call it Explainer Co. And we're going to track its very first day in business. Let's start journaling. And we are off. Explainer Co. is officially a real thing. The owner just put $10,000 of their own cash into the business to get things started. This is our very first financial event. Now check this out. This is our dead click rule in action. The business's cash is an asset, the A in dead. So to make it go up, we debit it. The owner's capital, the C in click, also went up, so we credit it. And notice how the debit and credit amounts are perfectly equal? That's the whole point. The system is self-balancing right from the very first entry. All right, Explainer Co. is not wasting any time. They're spending some money, that's a cash outflow, to buy equipment, and they're already making money, a cash inflow, from their first client. Let's see how our journal handles this little flurry of activity. Okay, so for the equipment purchase, we get a new asset, equipment, so we debit it. But we paid with another asset, cash, which is going down, so we credit it. Then, when the cash from the sale comes in, we debit our cash account to make it go up. And where did that cash come from? Revenue, or income, the I in CLEAC, which increases with a credit. You see the pattern here? It all goes back to dead CLEAC. Man, what a busy first day for Explainer Co. We've got 3 final things to log: paying rent, buying some supplies, but this time on credit, and the owner taking a little bit of cash out. This is the final chapter of day 1. Let's break this down real quick. Rent is an expense, the E in dead, so we debit it. Now, supplies are a little different. They're an asset, the A in dead, because we can use them later, so they have future value. We debit supplies. And that owner withdrawal? That's what we call a drawing, the D in dead. It's not a business expense, it's just the owner taking money out, so it gets a debit. Okay, our journal is now a perfect chronological record of day 1. But it's just a long list of stuff that happened. To really see what's going on, we need to organize all this data. So it's time to pull out those T accounts and start sorting. So let's start with our busiest account today, cash. What we do is we take every single cash transaction from our journal and we post it to this T account. All the cash that came in, the debits, goes on the left. All the cash that went out, the credits, goes on the right. It's a super simple visual way to see everything that happened to our cash in one spot. And now, what's the final score? What's the ending balance in our cash account? Well, we just add up all the debits, add up all the credits, find the difference between them, and $8,100. That is exactly how much cash Explainer Co. has in the bank at the end of its very first day. This right here, this is the ultimate test.
This is where we see if we did everything right. We've recorded every transaction, we've organized all the data. Now we put it all together and we ask the single most important question in all of bookkeeping. Do our debits equal our credits? So, we've done the math and found the final balance for every single T account, not just cash. Now we're going to list all the accounts with a final debit balance on one side and all the accounts with a final credit balance on the other. So, what do you think? After all those different transactions, are they going to match? Let's find out. And there it is. This is the magic of double entry bookkeeping right here. On the left, you've got all our debit balances. On the right, all our credit balances. And the grand total at the bottom? $11,500. On both sides, a perfect balance. That perfect balance isn't just satisfying, it tells us we've done our job correctly. The story we've written down is accurate, it's complete. This isn't just some math trick, it's proof that the whole system is in harmony. And with this solid foundation, we're ready for whatever comes next. Now, of course, in the real world, things don't always go this smoothly on the first try. One tiny little mistake can throw your entire trial balance completely out of whack. So to save you some future headaches, let's talk about a few common traps to look out for.
These are the usual suspects when your books don't balance. You know, accidentally posting to the wrong side of a T account, completely forgetting one half of an entry, a simple typo when you're moving numbers over, or just a basic math error. The good news is they're all usually pretty easy to find and fix, as long as you know what you're looking for. So, here it is, your 5-point inspection. Before you move from one step to the next, just quickly run through these questions. This little habit can literally save you hours of frustration later on trying to find one tiny mistake. It's your secret to staying balanced. And we did it. Explainer Co's books are built and they are perfectly balanced. But this is really just the raw data. The real question is, what story are these numbers telling us? I mean, did Explainer Co actually turn a profit on its first day? And what do these balances hint about its chances for success in the long run? Well, that's where the real analysis begins.